We're going to go on to the next session, Shaping Our Futures, the industry perspective, where we've got a lot to cover, and I hope some controversy in it all. Andy Homer, your chairman, is already on the panel. Can I ask to come up David Ross, CEO of Arthur J. Gallagher International, Julian James, CEO of Lockton Companies International and president of CII, Stuart Reid, CEO of Bluefin, Nick Houghton, MD of Towergate Network Division. Thank you very much. Now, we were talking a bit this morning about the sort of, how can we put it, testing economic background to all of this. As this morning's session was going out, Mervyn King from the Bank of England was bleeding in the nation's ear again about the dreadful effects of what's going on in the euro, the serious possibilities for UK growth and all of that. We're going to come on later on to talk about some of the very specific challenges facing the industry here. But I wonder if we'd like to kick off just reflecting on where we are on the economy and what that might mean for the industry generally. Who would like to pick that ball up and throw it around a few times in the air? Julian, perhaps.
Oh, thank you. I'm very pleased I volunteered for that. Where are we with the economy? Well, I think if you look at what's happening around Europe at the moment, there is no doubt that we're in some very, very uncertain times. We're also in a moment of uncharted territory. There is nobody that knows what is going to happen to the euro. There's nobody know what impact that's going to have on individual economies, and no one really knows what's going to happen to the impact that it has, not just on growth, but on most of our clients. We can't, as brokers, I think, manage that. We need to be observers of the process. What I find quite interesting is that if you look back over these uncertain times over the course of the last 3 to 4 years, actually good brokers have thrived. And good brokers thrive because their expertise is actually needed more in uncertain times than in certain times. And actually what we've found within our own company is that companies tend to buy more insurance when there are uncertain times. So where I feel at the moment is, yes, we're going to go through a period of chaos, and yes, it's going to be some things that are going to happen that are going to surprise us all, but please don't be pessimistic about our own future.
Nick, would you agree with that?
Yeah, it's, I'm no economist, and it's volatile. It's difficult to say how it's going to play out over the course of the next 2 or 3 years. I think the advice of an economist that I asked the question of, what do you do in uncertain times? And he said to me, Nick, you understand what you're good at and you get better at it. And I think that's great advice for brokers in the UK at the moment. It's the same for everybody. There are certain things you can't influence the things that you can.
Mm. David, you've flown in from Puerto Rico. What did it look like as you came across? You were peering out of the window. What did you see?
Well, in Puerto Rico or in
No, here.
Very cloudy.
Very cloudy.
Squalls. No, it was an interesting thing. I was talking to some of the guys this morning about it. Certainly the observation abroad, looking in, is that England, I think, and Britain suffers, even though we're not in the euro, we suffer by association with it. So a lot of people, certainly in the United States, wonder what's going to happen to the UK if the euro goes down. They wonder what's going to happen to the United States if the euro goes down. But I think there's also an observation that Britain hasn't perhaps coped as well with the recession as perhaps some of our peers have. Whether that's true or not is another matter, but I think you could argue that America started off considerably further behind where Britain is now and has galloped quite a bit in front, and I think we're in a difficult run.
Absolutely. What can the industry? I mean, there's nothing that the industry can do of itself to affect all of this. It's just the sea on which the industry has to do its best. But what are the things that can be done, do you think, inside the industry as you start to batten down the hatches for probably another couple of two difficult years ahead, I'd have thought.
Yes, I would have thought. Well, there are many things that we can do. I mean, I think Nick was quite right. You concentrate on what you're good at. I think certainly in the SME market in the UK, concentrating on specialisms, those things that set yourself apart from the competition, is a very good way to go forward. Giving specialist advice. And I think the future opens up a lot of opportunities that haven't necessarily been there before. It may be a subject we come on to, but the predominance of e-commerce, or the increasing dominance of e-commerce for us as a business, means that swinging in behind brands that we haven't looked at before as multi-purchases, the John Lewises of this world to name but one, and people purchasing insurance through different brands is a whole new area for us. The government handing out industries left, right and centre, the academy schools that are coming through, that's been a big success certainly for our business. So there are many opportunities out there. I think you've got to be aware that the times are changing, and if you don't change, it could be a very perilous situation.
And I'm sure there isn't a BIBA perspective as such, but, you know, as looking at the industry from above, as it were, what about the structural implications of where it is, given, as I say, at least a couple of pretty tough years?
Well, I think the absence of liquidity, which has been mentioned, has meant that a lot of the consolidation that's been taking place over the last sort of 5 or 6 years has slowed relative to that period in the mid-noughties. I think, however, that if liquidity could return or should return or might return, there are some fantastic opportunities because of this sort of flatness in the economy for more consolidation. So if your balance sheet allows you to use debt to buy other brokers, or to do joint ventures, or to join together, or invest in e-marketing, I think if you're adventurous enough to take the risk of borrowing the money, at the moment I think there are certain assets around that are a relatively good value. Now, for the smaller broker, I do believe Nick is correct. Being good at what you do in your local community is the way to go. But I think in the middle of the market, mid-sized regional brokers and the larger consolidators, it will be interesting to see whether they do use this opportunity of a relatively flat economy to consolidate. And there's also parallel rumour discussion around whether or not insurance companies, because of Solvency II and other issues, whether they'll consolidate too. So I think we could be on the cusp of a lot of uncertainty, but paradoxically perhaps, there may be more consolidation after a relative pause.
I'd like to hear other people on this. I mean, I don't know whether there's a general acceptance that consolidation is inevitable and good, or whether there's consolidation that simply sort of solidifies bits of the industry and fails to allow much advance. What do we think about that?
Well, there's certainly differing views. I think even the consolidators sometimes aren't keen on being called consolidators, so I think that says a lot. But yeah, I think there will be consolidation out there. I think the industry as a whole has had a pause. I think the economic circumstances will make it happen. It's very interesting to hear you say about the insurers. I think one of the things we haven't talked about so far is this economy will have impact on the insurers. A lot of the insurers have their bases, my shareholder and others, abroad in the euro. So whether that will drive consolidation in the industry, whether that might even drive increased premiums and rates, who knows? But yeah, consolidation is coming, and it's coming both to the insurer and to the broking world.
There's an age aspect to this.
Indeed.
I'm not looking at you there, that's true. But if you look at the profile of the majority of brokers in the UK, then a lot of them were born out of the 80s and 90s, coming out of the insurers, starting up their own business, and they're now getting to an age where they're looking to sell. So I think over the next sort of 2, 3, 4 years, I think as times with the economy bites, gets tougher, I think that'll drive brokers wanting to sell. And we're seeing it as a network, we're seeing increased activity at the moment. So I do expect it to speed up. Mm-hmm. Ultimately, will we then start to see new brokers being born with people falling out of consolidators or falling out of businesses that have been acquired, starting up their own businesses? Networks are a great place for individuals to do that. So I think there's quite an optimistic to consolidation that I think it will create new businesses as well. Will there be 3,500 brokers in the UK in 5 years' time? I do think that number will reduce.
Any other views on that from the other side of the...
No, look, I mean, I agree with Andy about the consolidation point. I just don't know about the fixation with debt. I think it's probably good to do it with earnings, frankly. I mean, I think the industry has a lot of external debt in it right now, and that debt is not necessarily long-term debt that wants to be in this industry, and that creates a bit of an alignment of interest that actually doesn't really work necessarily for the brokers or for the insurers. So we've probably Gallagher, probably more than anybody, have taken advantage of what is a flat economy. We've more than probably quadrupled the size of our business in the last 12 months. And I think we look at it as an arena that's ripe for us to basically step into. So long may the recession continue.
Okay. There's a lot of talk this morning, Eric brought it up in his opening speech, about the effect of commoditization and the selling of complex products on the internet. Do you think, as a panel, that the public gets what brokers are offering enough? And in a period of consolidation, in a period of big change, does more need to be done to explain to the public the special nature of what some of you offer? Silence.
Let me wade in there. Do the public understand some of the products that they sometimes buy? Absolutely not. And I think that if you go down some of the distribution channels and how that business is sold, do I think that they really look beyond the price of the product? No, I don't. I do think that is going to be a focus of our regulator and whatever regulatory regime we finally end up with. I think if you look at the consumer end of the business, there is going to be an increasing focus on that. And the sooner you can kind of get ahead of the curve, so much the better. When it comes to more complex products, and the business that I run deals mainly with commercial clients, most of them want to buy through a broker because they recognise the value that a broker can bring to that transaction. They recognise the value that a broker can bring about market selection. And I don't see that trend changing. The world is becoming increasingly complex and people want advice. And therefore, I'm pretty optimistic in the business that we're in about not only the product that we have to offer, but also the role that a broker is going to play in that transaction.
It's interesting. Nobody seems to be worried particularly about hard times driving prices down in that case. There's a sense that actually it may go the other way. Or are people worried about price?
Oh, I think people are always worried about price. I mean, but I think if you, as a broker, do your job correctly, you educate a client about risk, and it becomes less about the price and more about what they're buying for it. I mean, you can buy something awful for not a very significant amount of money, but frankly, when you need it. I mean, insurance is a weird commodity because it's about the only thing you buy where you genuinely hope you never need it. And the broker's job is to make sure somebody is aware of the things they're not thinking about. So I'm not worried about our role because I think the client needs us. So it's just up to us whether we're educated enough to explain it.
There's certainly different arguments for different levels of business. I think the industry has to accept that we have made products much too complex for the smaller business to buy. And I think there is a drive through e-commerce and for other reasons to try and simplify those products. There are dangers in that. But yes, I would agree, a lot of our clients get a lot of paper and don't read a lot of it.
My observation would be, Andrew, that we have been faced with sort of mis-selling of products over the recent years, but by and large, and I'm crossing my fingers when I say that mis-selling of general insurance products has not been associated with insurance brokers. No. It's tended to be banks and other institutions such as that. And I think that's because brokers do genuinely try to give advice rather than just whack out a product and whether it fits or not, hope for the best. Whether or not we're getting across sufficiently as BIBA, that we can help with solutions such as older drivers, travel insurance for people over 75, people that can't get flood insurance. I think as the FCA, which has a consumerist agenda, looks more at product design and looks at the non-availability of insurance in some cases, because if you go on a website, if you don't fit the 6 questions, you're thrown out. And as a journalist, you probably have found this difficult yourself when buying motor insurance. Then it seems to me brokers have a real opportunity. So I think we've just got to punch our weight in that debate.
Yes. I'm just interested, this is not completely on theme, but what your views are as to whether more and more extreme weather conditions are creating a rising sort of issue in the industry about flooding in particular.
Absolutely.
And where new build has gone.
Yeah, no, absolutely. We have an office in Hull, as an example, and it is very difficult for people to get cover for their houses, for their buildings, because of the problems they've had in the past. There's a huge debate going on with the industry, the ABI, regarding flood cover, who should be responsible for it, whether the government should wade in. So yeah, weather is causing great issues for UK PLC.
I think mentioned regulation, which is obviously something that we need to talk about, the FSA becoming the FCA. Well, Julian, since you've been picking up ball after ball that I've been lobbing at you, very kindly, let's talk a little bit about the regulation, the new regulatory regime and how worried people are.
Yeah, I think the concerns that I hear around the industry, and this is both from brokers and from insurers, is they're not quite sure what it's going to be. And there's clearly been, huge debate over recent years, and there's been papers and there's a bill going through Parliament at the moment. But people want to understand what that regime is going to mean for their business. And I don't sense that people do know. And the conversations that I have with the leadership at the FSA and elsewhere is they talk about what they want to do, but we haven't actually seen that environment operating. Now, whatever you think of the FSA and what they've done, at least they have been running a pretty predictable agenda. And you can build your business around knowing what their plans to do. But if I look forward 2 years and say, well, actually, should I be worried about how we sell some of the products to our customers? Should I be worried about how much solvency or how much money we retain within the balance sheet of our own company? I can't answer those questions, and that does concern me. And then when I hear, and I was at a conference in London yesterday where one of the more colourful figures in the London market spoke, he talked about the fact there isn't an insurance person in the senior leadership of the Bank of England. And his comment was, well, actually, we think the insurance industry needs to be heard and understood at a senior leadership position within the Bank of England. So the concern I have, at the moment, is actually wanting to understand exactly what that environment is going to mean for our businesses. And I think there is a lack of clarity at the moment that exists there.
Yeah, I think it was spoken about last year in terms of fair and proportionate regulation. Eric was talking about that. And I don't think there's a problem with that. I think that's a good thing. As an industry, as a profession, insurance broking, I just think it's this tiny part of a much bigger agenda with banking and everything that's going on. And so my concern is, or my challenge is, to what degree, because there isn't representation at the top level, to what degree do they understand what it is that we do in the room?
And does that feed through to a general worry about sort of fear and loathing of the financial services industry generally, particularly from the recently elected president of France, but across the Channel and in Brussels?
Yeah, there is significant concern. With the lack of knowledge, fear arrives. We've set up our businesses to comply with the regulation to date, yet we don't know what the regulation of the future will be. And if it is different, which I guess it will be, if it is different, that's going to mean extra cost, extra burden, and extra hassle at a time where, frankly, we're trying to concentrate much more on the client.
I think there's some pointers. I think it's called the FCA. It's going to be, we've already had signals that it's going to be looking at product suitability and product design and transparency. We've recently seen examples where a very reputable company, HomeServe, selling emergency covers for the home, were involved in alleged mis-selling for all sorts of reasons, one of which was having to try to explain this, what you would have thought is a simple product to a customer and not mis-sell it. We've had referral fees, which Jack Straw has jumped up and down about, where insurance companies have been referring third-party injury awards to its own panel of solicitors and lawyers. So I think that whether the consumer knows what he's buying and whether the consumer is getting good value for that advice, particularly in the smaller transactions. I'm not talking about sort of international brokers giving advice to, FTSE 100 companies, but at the consumer level, I think a broker being able to prove beyond reasonable doubt that they did explain that product to the customer, that the customer understood what was being sold to them. I think that's likely to be the direction, but I echo what Julian said. We're not entirely sure about that.
And are you all generally worried about the prospect, or the reality really, of a new attitude to regulation which comes out of one part of the financial world being imposed on an industry which is very different, and where the fees are becoming extremely high, the cost of the regulation, that is?
Well, I think, listen, I don't care what they call themselves. They need to tell us what the rules are. I think the difficulty is that if you've got a principles-based regulator, and as Julian said, you try and design a product, and you're saying, well, does this fit within the FSA's principles or not? They're not really rules, so you don't know whether you're breaking them. It's incredibly difficult to live in fear every night, wondering if the FSA is going to march into your office the following day and fine you £3 million for doing the wrong thing because they've retroactively decided, actually, we don't like that. I think the worry for me is that 6 or 7 years ago, I remember when I was new in my job, the FSA were very close and consultative about helping me to understand what we needed to be as a company. I also remember them saying, don't do this to be compliant, do it because it's good for professional standards. And it was a very important lesson for me. But in the last 12 months, you've had the head of the FSA stand up and say, business, be afraid, be very afraid. And at that point, the lunatics are officially running the asylum. We're in real trouble, because that isn't a speech that gets heard in the UK, that gets heard all over the world. And when you've got a regulator that becomes bordering on invasive, possibly oppressive, and won't give you the rules to say what they're going to be oppressive about, I think you've got a huge problem on your hands.
Andy, you're nodding at that.
Yeah, I think that's true. There's no question that they have set out the agenda to be more interventionist, and some of us have been on the receiving, with another hat on the receiving end of something which we won't bore everybody with, called Threshold Condition 4, which is around how much spare capital you've got in your balance sheet, and there was absolutely no regulation around that. And I agree with these guys that the uncertainty is difficult. I would say my recent experience is I think the guys at Canary Wharf are trying to consult. I think they are trying to make this transition to Twin Peaks and be helpful to the industry. But I think the reaction from all of us is pretty similar, that we still believe, despite those valid attempts, there's still too much uncertainty.
I think the challenge is some of the people sat up here have got lots of resource providing advice and consultancy in terms of this area, and there is the community broker that doesn't have that resource and that time, because they're helping de-risk their local communities. They're out there broking and doing what they do, and it's a massive distraction. And the risk is that spending time and money just being compliant actually does cause real damage to your business, because you're not out there winning and retaining customers.
Stuart?
We're an acquisitive company, and I phoned up a vendor yesterday to speak to him to see whether he was interested in selling his company, a relatively small company, but very well formed. And he was sat there writing his data security breach policy, which he felt was a little bit beyond him and was a driver for him to sell. So that was fascinating.
What's the name again?
You're too cheap, Andy.
What does this say about the position of London in the world market? Because an industry the size of the agricultural sector, it's a big industry, it's got a big worldwide reputation. Is this starting to affect London's standing?
Listen, unlike Stuart, who was trying to buy a company, we actually did buy a company last week.
No quality control, David, no quality control.
Yeah. But what was peculiar about that? Sorry. He rode a horse here. Look at his boots; they're lovely.
Thank you, David.
We announced we bought a company in Bournemouth last week. What was fascinating about that was that we actually signed the contracts to buy that company 6 weeks ago, and it took longer to get approval from the FSA to own it than it did to actually do the due diligence and agree the contracts. And we had people in America going, when do you need the money? And we're waiting for someone to give us permission. And that was a really weird thing, because it was an authorized company being bought by another authorized company, both approved by the regulator, who had to decide, and bizarrely, we had to wait 2 weeks because our regulator was away on holidays. And then when they got back, there was a huge backlog, and it's ridiculous.
I should have told you the FSA are in the back of the room.
That's right. I'm a big admirer of what the FSA does. I'd just like to qualify that.
Okay.
Strike him off.
I think some pretty clear messages there. Can we turn to a couple of sectors, a couple of areas in the industry which have been causing some concern, motor and health, and what can be done to revive, get some more movement in those sectors? Who would like to kick off? Stuart?
Well, we get involved in motor insurance as a business. It's a tough old market out there, lots of competition coming from everywhere. Private health isn't an area that we get involved in. Private health has its own nuance, I think. The little I know about it is that it's usually extremely complicated to buy, even more so than normal insurance. It's difficult to compare products. And remuneration, commission payable in that industry is rather strange. It tends to drive what we call churn, which is changing insurers each and every year. So I think the private medical insurance side of things probably has quite a lot to sort out amongst itself before it perhaps can be the industry that perhaps it might want to be or to grow. As regards motor insurance, well, it's very, very difficult to call. We've had motor insurance rates going up, going down, staying the same, going down again. It's been a very, very tough market to be in. The competition out there now, every time you turn the television on, there's another advert for another thing. I think it will, maybe this ongoing recession may find out some of those models that aren't as profitable as others, and that might give us as brokers, certainly, the opportunity to actually get back into that motor market. It is, I don't have the figures to hand, but it is surprising the significance of the percentage brokers still hold of motor insurance, despite all of that. You've got people out there guaranteeing to beat a premium, yet the people out there in the audience are still doing a fair whack of motor insurance because they know they get quality of service.
Andrew, I know a journalist I met this morning who had a recent incident.
I wonder who that could
You
have
might
been.
wish to share it, because I think that lies at the centre of one of the dilemmas for the motor insurance pricing, where ironically the more claims that occur, the more the premium goes up and the better we do.
Absolutely. I mean, I was involved in, I should confess, in torching a couple of garages and looting a supermarket or two. I had a very, very common experience, which was gently bumping into another car, literally like that. I mean, no more than that, in almost stationary traffic, saying hello to the guys who were in fact Polish, and it was all very jolly. We exchanged numbers, da-di-da-di-da, and 2 weeks later, whiplash claim from the driver, and then 2 weeks after that, whiplash claim from the two passengers, all of whom were it was totally nonsensical. And I phoned the insurer and said, look, this is completely fraudulent. And I said, well, you have to go, you might have to turn up in court and say that. I said, I'm absolutely happy to. Witnesses and all the rest of it. And then the final straw was a whiplash claim from the fourth passenger who wasn't in the car. But I fear that was simply just paid out. It was too complicated. And even when you've got people like sort of gobby people like myself who would quite like to go to court and confront some of these guys, there's nothing can be done about it.
It's a big problem. I mean, the worry for me on motor, and we're not a huge player in this space, is that the problem with the aggregators and the compare the meerkats or whatever it is you want to do is you're actually giving all the underwriting authority to the person filling in the stuff on the computer. So whichever box they check, they know the price goes up or goes down. And someone will basically, they will put, you know, slightly spurious information in to get the cheapest quote and then take a chance that they're not going to have an accident. And the problem you've got is you're trying to run a proper underwriting business with proper underwriting discipline by handing control right down the line to the consumer in the middle of the ads in Coronation Street. That's a really difficult place to be, and I don't envy any of the insurers trying to compete in that space. I think it's a difficult market.
I'm also interested, to a degree sceptical, but you know, I'm prepared to be convinced that the use of telemetrics is actually going to sort of, how that benefit is going to play out, because isn't it the case that the better risks will use telemetrics to cut down the premiums they pay? And what about the people that
left at the bottom,
don't use telemetrics because they don't want to pay more? So how technology will lead to premiums varying by either exposure, the number of miles that you do, or the type of the speed at which you drive. I think for me that's a huge uncertainty. I'm not sure that's actually going to take us to a place where overall motor insurance is any more profitable than it is now, although I do have insurers telling me that that is the answer. Telemetrics is the answer. But
It sounds to me like a part of the market which is so mature it's gone doddery, which leads me back to health, which is presumably, I mean, given all the worries around the NHS, given the huge amount of worry about you know, care in later life and all the things that people want to get done to them, ought, you would think, to be the next or one of the next booming markets.
I think there's definitely a desire, a need for more stripped-down products to make it more affordable. But quite how you get the selection against the insurer there, you know, you get the people who have health problems taking out those stripped-down risks, I don't know. But definitely a more simplified structure for private health, you would think, would you not, would have great demand within the sector.
We've touched on it a couple of times indirectly, but I'd like to sort of just talk directly about the effect of digital technologies on the industry generally, price comparison websites and all the rest of it. There's no turning back the clock. I said earlier on that, you know, for journalists trying to do a professional, sophisticated job, getting under the skin of a particular government policy and so on, it's very difficult that so much of the news is now produced sort of without payment. And some of it, frankly, you know, there's very little value added at all. And so I come from an industry which feels at times like it's being hollowed out, so-called citizen journalism and all the rest of it. Is something parallel happening to brokers at the moment?
Yeah, I think it's a case of be careful what you wish for, because you see a number of brokers and insurers looking to use technology to improve efficiency and strip costs out of their businesses. The risk, I think the technology should be used as an enabler to enable a broker and an insurer to trade in an efficient way. But I think the minute you start to get creep where you're pushing it down the line of it's the consumer ticking the boxes, then you're starting to undermine your own role. I think the big risk for brokers from a technology perspective is, and it links a bit to commoditisation, that the consumer will always, if it goes wrong, will always want some recourse against somebody or some organisation, and sort of making the process so simple and dumbing down the role of the broker. If the broker's still involved, the broker's on the hook should the claim not be paid. And I think technology has it carries the risk of putting a greater risk on the broker the more that consumers are involved in the transaction. So I just think we should be very, very careful in terms of how we use technology. There's no doubt, as an enabler, great thing, but it's how it's executed.
So the broker is not using the advice and the expertise and the knowledge, but is getting back all of the risk.
Yes.
Yeah.
That's what we're saying.
Yeah.
And in times of changing, a material fact is something that a client must disclose to you. As times change and those things, I think that's under review, it becomes a material fact is one an insurance broker should ask. That's a massive change. And how you tie that into technology is fraught with difficulty.
Let me make a couple of points. I think, you know, technology is such a wide subject. One area I look at with technology is actually, the whole subject of use of data. And if you look at, certainly on the underwriting side, and the trends over the last 10 years, there is just a ton of data that exists because, it is just around. And I remember sort of sitting in meetings sort of 10, 15 years ago and, people talking about, actuaries and how they were going to change the industry. Well, actually, what has changed the industry is smart use of data, not the data existing. And there is a danger, I think, that people get so suckered by all this information running around that they don't actually know how to interpret it, they don't know what they should be looking at, and don't actually act on it. So I think even within the broking community, it is all about smart knowledge overlaying what information exists in front of you that is going to differentiate you. I'm not sure I agree about the point that technology is going to put greater risk on brokers, because I think one of the things that technology can do, it can improve the transaction between a client and an insurer. It can improve the speed at which money flows between parties. But I think the real win is that it can also track what happens at various points in that transaction. And actually, if you can actually analyse quite clearly what data goes through the system and what is there, it actually ends up being a more efficient industry.
You're leading towards transparency, and what do we feel about the insurers themselves and where that's all going? Andy?
I think the argument from BIBA has always been around transparency, that we're happy to go with transparency provided there's a sort of level playing field. And one example of that would have been, one dimension of transparency would be commission disclosure.
Yes.
And that discussion and debate foundered, although it seems to be raising its head in Brussels. And one of the reasons it foundered was that the acquisition costs, i.e. broker commission, if that has to be disclosed to a customer, how do you disclose the cost of advertising Meerkat to a customer as a percentage of the premium they pay on an aggregator site? And therefore, if we're going to have transparency, I don't think anybody would fight that to the death. It's what is the nature of the transparency, and is it a level playing field across all methods of distribution? And that's a rather more complicated question than it at first appears.
And if it's possible to say so, is that a battle that's being won or not at the moment, do you think?
I think the battle is, well, we've agreed with the FSA for the next 3 years the way in which we will volunteer to give, in this example, commission disclosure or earnings disclosure to clients upon demand, and that's where it currently rests. If we were to go further than that and to have on the, rather like your council tax bill, if we were to show as part of your renewal offer what was getting paid by way of VA, IPT, commission fee, additional charges, if we were all to do that, executing it would require us to change our billing habits, various rates of commission.
Another big slab of expense.
It could be, and the research appears to indicate on this simple dimension of transparency, i.e. commission disclosure, that not many of the customers were pressing for it.
Yeah.
So that stopped. I think transparency around the relationship you have with insurance companies, whether or not you're putting business from a retail business into an MGA, whether you're using a single product rather than broking a product. I think transparency in those areas, that will continue to be pressure, I think, to be clear who you're acting for. Are you acting for the client or are you acting for the insurance company?
Sure, sure.
Let me make a couple of points, if I may. This whole subject has been examined in depth over the last 5 to 10 years. And there has been so much focus, not just from the FSA, but from other bodies and from Brussels. And I do sense that there is no new information that is being injected into this debate. And to be frank, I'm quite bored that we're continuing to talk about this. Because, it's a bit like the Man City, Man U result of the weekend. You might not like how it ended up. In fact, I did like how it ended up. But you can't go back and redo that. So let's just accept all the debate that's gone on and move on.
We're coming towards the final few minutes of this session. Just to sum up, we've got a flat as a pancake or worse economic outlook here, a huge amount of uncertainty in Europe, flat-footed regulation, higher costs, and various threats coming from the digital world. Where is growth going to come from? Where's the optimistic outlook, please, guys?
David Ross in Bournemouth.
Puerto Rico.
I think what the country is going through is actually good for the country. I think it brings discipline back into running business, and I think this will be a process that people will come out of more mature and hopefully wiser from it. I don't think we want to be on a down escalator. Everybody here is struggling with exactly the same things. This is a very, very difficult environment for everybody. But actually, it's a thing that hopefully will improve our economy and it'll improve the country. This is a very difficult period and we'll be paying for it for a long time. I do worry that the country is not as well equipped to cope as perhaps some of our peers around the world are. I don't know why that is. I'm not a politician and I don't want to get into a debate about it now. But the only thing we can hope is that from our perspective, that the people in this room can continue doing what they're doing and we'll all get there in the end.
Stuart.
Yeah, as I said earlier, with change, opportunity comes. Insurance brokers are an extremely resilient bunch, and despite consolidation, we are in an industry that is needed now more than ever. So the opportunities abound. I think it is a question of changing to the environment that you find yourselves in. You've got to change the way that you market your business, you've got to change the way that you run your business. But if you're up for that challenge, and I'm sure a lot of people in this room are, then the rewards are still there.
Julian.
Well, I agree with everything that's been said, and right at the outset, I think I said that this uncertainty leads to opportunity for insurance brokers. The one point we have not touched upon in this debate is that the industry made a massive mistake about 3 or 4 years ago when the world started going south, and that is they went and fired half the workforce that. Well, half is a bit of an exaggeration, but the reaction of most companies, both insurers and brokers alike, was to go and trim your staff costs. And the only way you do that is go and fire a bunch of people. Now, for a broker, my view is that is the dumbest thing that you can do at times of uncertainty. Clearly, our cost base is built around people and premises, but if you are not going out and investing in people right now, you are not going to survive the really tough times ahead. And it's not just firing the grey hair that's in the office, but it's actually thinking about where the people are going to be in 5 years' time who are going to be vital parts of your business. So my plea to you is think long term, don't think short term.
Nick, has probably fewer grey hairs than most of the people on.
That's very kind.
Fewer hair.
For her.
Fewer hairs.
It's not wearing cowboy boots. I don't think the, let's call them the SME broker, actually shed their good people. I think they've, the end of the SME broker has always been talked about with direct writers, with aggregators, and now with recessions and global crisis. And do you know what? You look around this room and the people in this room are still running really, really good businesses, and they've got good quality staff, and they give great advice to the SMEs. UK PLC is dominated by SMEs. So I think the optimism comes from the brokers there's been consistency, it's tough, and that polishes you up and makes you better. But I think there's great optimism in that they've got great businesses and can take advantage of some of the bigger players and some of the other brokers that do take their eye off the ball and maybe have shed people. So I think that's where the optimism comes from my members.
Andy?
Echoing many of those remarks, the point that I'd make about the brokers probably sitting in the audience today, these guys are retaining customers at something like 85-90% per annum, compared to many other distribution chains like aggregators that will be shedding 50% per annum. So what does that tell you? It tells you that the brokers love their customers, they give customers great local service, and they retain those customers going forward. And I do believe that as commoditized service doesn't deliver customer satisfaction, it is a great opportunity for brokers that look after their customers, and that's where I think the growth will come from. I think there's even room, but we haven't got time to debate it, for us to start to put up the fees that we charge to deliver that service locally on a 24/7 basis. So there may be some headroom to increase the margins that we retain, but there is certainly lots of opportunity for us to focus on the customer in a commoditised world and just deliver great local service, and that's where I think you get customer growth.
So you're advocating hugging customers tonight in the bars of Manchester?
Absolutely. I'll give you a kiss.
I think there will be a bit of that.
I suspect.
Wow, it's getting a little homoerotic right there, isn't it? Not what we expected at the end of that. I hope you feel that we covered a lot of ground there. That was a great session, I hope. So thank you to you all. Thank you to Stuart, Nick, Julian, Andy, and David. Thank you all very much indeed. Now.